Hey guys, and welcome back to another ICT simplified video here on the YouTube channel. Today we're going to be talking about the ICT mitigation block. So in the previous 3 videos we already talked about the breaker, the order, and now we're going to talk about the mitigation block to round things up. Alright, let's get started straight away. If you have watched all the other ICT simplified videos, the link for them are in the description box below, or they can be found on my channel. This overall looks very similar to you. The mitigation block, in its core, it's very similar to the breaker block, but with a tiny little difference, and let's talk about that right now. So first of all, once again, we need bearish market structure or bullish market structure, depending if we're looking for a bullish reversal or a bearish reversal. I will show you the bearish example afterwards. So we have bearish market structure, which is identified by lower lows and lower highs. We keep on doing that, and right here we break the most recent lower low. That's step number 1. Step number 2 is we need a failure to break the lowest low. So currently this is our lowest low. We pull back like we did right here and right here, but this time we fail to break lower. And if you came from a ABC pattern trading background, we look at the most recent lowest low on our chart as our point A, and the lower high with the pullback is going to be our point B. So the move from B to C fails to break our most recent lower low, A, and it's labeled as a failure swing. This is the difference to the breaker block. With the breaker block, we would have swept A one more time, and then we would have seen our displacement, and then we get the retest, and then we continue. But with the mitigation block, we do not get this most recent sweep of the lowest low before we shift market structure. We fail to make a lower low, and this is really important. But then, same steps. We get our displacement from C, forming a new higher high, so we break above our most recent lower high right here with B. We close above it, we shift market structure, and then we identify the highest up closing candle from the most recent pullback, which would be from A to B, lower low, lower high. This is our pullback like we did right here, but because we broke above it, we can now look for the highest up closing candle, and same way we looked at it at the breaker block, we said that old resistance has now been turned into support, and we would expect support from our highest up closing candle within the most recent pullback from A to B. Very simple, very similar to the breaker block, but with that tiny little difference that right here we have a failure swing. So to show you the actual difference one more time, right here on the right we have the breaker block, and to the left we have the mitigation block. And as you can see, the only real difference here is that for the breaker block we actually swept the low A one more time here, and then we displaced. Here with the mitigation block we failed to sweep our most recent lower low, and then we shifted market structure. So they are very similar, and most of the time you will, let's say for example we assume that right here we have our ES1 chart. This is ES, and over here we have NQ. Because most often this setup, the mitigation block setup, presents itself on either ES and NQ, because most of the time they are moving very similarly, but that's where SMT divergence comes into play. I already made a video about SMT divergence. It's on my YouTube channel, so check that out. But right here on NQ, for example, we formed a lower low. So NQ swept sell side liquidity before it displaced, while ES did not sweep that sell side liquidity. It failed to break lower. So right here we have bullish SMT divergence. And now let's also take a look at the bearish mitigation block. So the bearish mitigation block looks similar to the bullish one, just flipped on its head. We make higher highs and higher lows. We fail to break our high one more time, and we displace already, forming a new lower low. And we look at the most recent down closing candle from the A-B price lag. to draw our box for the mitigation block, and we look for an entry inside our mitigation block, maybe with an overlapping PD array like a order block or a fair value gap, like we talked about in our last video talking about the breaker block or the order block. And yeah, once again, same thing, this time with a bearish SMT divergence. Most of the time what we see is that ES leaves behind a mitigation block and NQ a breaker block. You could also turn this around. It's not always this way. So in this scenario now, NQ failed to make a higher high, while ES made the higher high before it displaced. So this time we have a breaker block on ES, broke the higher high, market structure shift, pull back into the breaker block, continuation lower. High, low, failed to make a higher high, market structure shift, pull back into the mitigation block, lower to attack all the sell side that we have left behind. Very similar setups, but it's crucial to know the difference between both of them. Alright, and that's already the end of the video. If you have learned something new, make sure to give this video a like and to subscribe to my YouTube channel so you don't miss out on any new videos coming up. And to stay up to date with everything the community or the accumulation zone does, feel free to join us on Discord. On Discord I stream live every day during the New York kill zone, where I also share my executions, unlike most other streamers that trade our tape read ICT concepts. They always look at the chart and then 5 minutes after they entered, they mention, oh yeah, I entered down here at a super cheap price and I'm now in profit. So if you want to see, or if you want to sit in front row seats watching me trading on my funded Apex accounts, feel free to support me on Patreon. The link for that is in the description box below.